Hi, I'm Troy Theobald, Director of Financial Services here at RFS Advice, and just want to give a bit of an update on what's been happening in portfolios in the last quarter. While we've been very comfortable with our returns from our models over a long period of time, last quarter we've certainly seen a change. So with the war in Russia, we've got issues of interest rate increasing, we've now got elections coming in Australia. So we have noticed, particularly in the last quarter, some underperformance from the managers we've had in the portfolio. I just want to give a bit of more background, not only on domestic, but also international. We're seeing that same trend emerge. So if we look at what's worked in 2022, certainly an index-based approach or that flight to quality, that top 20. We do have an allocation to the Van Eck equal weighted approach here. It certainly had a very good quarter. We did include into the portfolio some top 20 exposure in the last quarter, and that was to cover off on this, that we're actually now seeing that flight to quality. As people are a little bit concerned in markets and worried about outlook going forward, we're seeing that flight to larger companies. So what's actually been happening out there in markets from a perspective of a growth manager? So growth managers tend to try to outperform over time. They've seen this big sell-off in growth assets in the last quarter. When we put it into perspective, it really was giving back those gains from late 2021. So the companies that were doing well coming into 2022, that asset sector has been massively oversold through this period. Now we've had meetings with the managers, not only Hyperion in there. If we have a look, similar story with Benelong, same scenario there. They're seeing the rate of return of the companies they're holding probably at the highest projection for than they've ever seen in the portfolios. They're comfortable with the companies they're holding, those companies are going to continue to grow. They see this more as a market cycle issue at the moment, really around sentiment there. History would show over time that they've certainly recovered from that. Internationally, similar scenario. We are seeing a bit of negative even in some index-based approaches there. But also from our growth manager internationally as well. So we've seen that gap or that outperformance narrow. They've had a similar scenario there. So when we look at internationally, what does this tell us? It actually shows it's the biggest swing from growth to value all the way back since 1974 there. What have we seen in all of these in the past? We've seen a kickback, or basically within 1 to 2 quarters, that recover. So look, from our perspective, we've certainly met with the managers, we've met with the portfolio managers from the different teams. If we look at Franklin, we look at Benelong, we look at Hyperion, some of the names in the portfolio, they're unrelated companies, unrelated managers, all coming to a similar scenario there, with the fact that purely we're seeing a flight to that value basis at the moment with worries on what's happening overseas. They don't believe that's a long-term change. They're sticking to their fundamentals, and from our perspective, in a portfolio perspective, we added some top 20 exposure in to reduce risk. We reweighted the portfolios at the end of March as well to take advantage of what has dropped, and we're certainly keeping a very close eye on things. If you're concerned at all, please reach out to your advisor or your client manager. Come and have a meeting. We're here to help and get through these periods. We are long-term investors. So while we're not comfortable with what happened the last quarter, we absolutely understand with the professional managers we're using the reasons why, and we're comfortable in their ability to turn that around.